Okay guys, this is Christian with Good Eats FX. This is another video for the mentorship course. Today I'm really excited because this is one of my favorite market profiles to go over, continuation market profiles. Why is this my favorite? Because it lines up with everything that we're taught and promised when we come into the trading realm. Continuation, it means it's just a trending market, right? Now, I want to get a little more involved in the description of what it means for a interbank style trader or a smart money trader to get involved in the market when it's trending. What I'm going to share with you today is how IPTA creates daily expansions, meaning you're in high probability setup mode because the market's trending. Okay, so as a day trader, you will be looking for strong order blocks at equilibrium or fib level entries at a discount or a premium, depending if it's a bearish or a bullish price swing. Okay, this is a very fun topic, and today I have a great example for you right behind me. This is AUD USD, and what I'm going to be showing you is how to get involved in the trends that just go up for days on end. Let's get right into it. Let's go. Okay guys, we're here on the daily chart. We're talking about the AUD USD, and what I want to show you is how we form narrative so that we can create a daily bias. As you can see, when price is printed, it's very easy to say, oh, it was buying for 10 days. Cool, it was buying for 10 days. How do I get in? Right? Let me go over the ranges. Before price ultimately made this swing low here and ran up here, we had a swing high that brought us to the swing low, and that's this one right here. This last up candle before the aggressive down move is what caused displacement in the market. What do I mean by displacement? Well, we had a market structure break here. We had a fair value gap left in price here, and we only had sell side delivery. We are shorting every single day from this swing high until it makes a swing low. On this day, we lose. If you don't know how to manage your money, you could still be a winner even on the days that you're counter trend because you're following the directional bias on the daily. Okay, so on this day, once we get this three candle fractal creating a swing low, what we are wanting to see is the next day run this high. This is candle number one of the swing. Once it does that, we now have framework for a continuation market. Okay, so let's go ahead and do a couple markings, and then we'll walk through everything, and then we'll jump onto the intraday time frame. Okay, so the first thing I'm going to outline is this low here. These are sell stops. Okay, and above here, these are buy stops. Okay, this is a consolidation program, and we know based on the second video in the market profile series here, our consolidations ultimately return to equilibrium, create a swing point, and then explode to a direction desired by IPTA. Now the question is, how do we know that it was going to be an accumulation? Well, we see all these lows here ran. We see a swing low form. Once we see a swing low form, our attention goes to the fair value gap. Why? Because this fair value gap here, took 3 days to form this fair value gap, and when it did, it created displacement, aggressive selling. This is a real order block. When you see an order block create an up candle that aggressively sells, leaving displacement, meaning running from liquidity that makes a market structure shift or break, that is the cue to know that it's a real order block. Well, when price wants to now reverse and then can do a continuation to the upside, we need to see price actually get through this resistance, which is the fair value gap. So what I'm going to do is I'm going to outline the fair value gap. Okay, this is the fair value gap. And what I want you to know is that when price came here on the fourth day of this fractal swing low pattern, it did what it needed to do. It ran the high here. It generated equal highs here at the discount level of the fair value gap. So what do we want to see as a buyer? Because remember, once this candle comes up here, we're in a buy program. Okay, this is a continuation program at this point, because you have to anticipate, well, we had a swing low form, fourth candle ran and broke above this and closed. So now the next day, we just want to see price run previous day high. That's the number one objective of the day trader, is to get the trade and take profits at previous day highs. Bullish market, previous day highs. Bearish market, previous day lows. So price does that. It comes down here to about equilibrium of the previous day, and it runs away. Okay, next day. Does price run previous day high? It does not. Why doesn't price run previous day high? Why, that's going to be the question that you're always going to ask yourself. Why didn't price do this? Price creates more liquidity at the array that we are finding resistance at. We're still bullish because this day ran previous day high. Now this day failing to only indicates one thing: reaccumulation. This sell day comes to where? To the premium end of this BISI, which is just a bullish fair value gap, okay? Keeping it simple at Good Eats. It comes here and price immediately halts. This is a buy signal. This is a New York close buy, rollover buy. This is something that you would learn later on in the mentorship, but this is one of the techniques we teach. When you know it's a continuation program and you see a discount array right here, you know that this is where price is reacting to. So let's go ahead and put that on the chart. So on this day it comes to the premium level, and what does the next day do? It runs the low of previous day and aggressively runs back up. And not only does it run from the consequent encroachment of this BISI, it goes directly to the premium level of this SIBI. Okay? BISI, bullish fair value gap, SIBI, bearish fair value gap. And what this indicates is that price on both of these days directly traded into fair value, because this is another form of displacement, right? Just like we have displacement down here. Remember what I told you, real order blocks will not form unless if we see true displacement and fair value gaps left behind. Okay, look, real order block, right, at the swing low form with displacement running stops. This is a break of structure, leaving fair value. So when you see these 2 days here pulling down, all they're doing is coming back and adding orders. Who are they? IPTA. IPTA is coming here, retracing down just to add more orders into the market here. This is an accumulation. Or better yet, this is a reaccumulation, because the accumulation happened here, the stop point happened here. This is now a pullback into fair value, and now we're reaccumulating, and what happens? We hit consequent encroachment and explode. And now, not only did we run previous day high, now we have an old daily high we ran, and we closed at the premium level of the fair value gap. The next day, same thing. We expect previous day to be ran, and it does. What happens? Price comes down. Why did price come down here? Well, remember, this old fair value gap gave sell side delivery, and then it comes up and gives buy side delivery. This is now a balanced price range. This is something that you're going to learn later in the mentorship as well. Okay, the fair value gaps aren't just imbalances in the market. They create true support and resistance. This is a balanced price range, so price is actually creating support at the balanced price range for 2 days in a row, and price is actually running previous day highs still each day. Okay, and you can see that this creates another fair value gap, but a bullish order block. We have nested arrays here. Okay, this is a premium institutional order flow entry drill, entering at the premium level of the fair value gap. Price comes up, breaks the high, and they run this high. Now guys, we're finally at the origin of where price came from, which is this swing point, which is equilibrium of this consolidation. Okay, the goal is to get above here. On this day, they do it. And then, as you can see, once price is in motion, it's going to keep going until it makes a swing high on the daily time frame. The next day runs the high, previous day, next day runs the high. Once these buy stops are ran, above this liquidity is going to be the array that we expect price at some point to create a swing high at. Okay, it doesn't have to be this array, but based on what I'm seeing on the daily chart, there's really not much else that would halt price. So if you see this bearish order block here, right? Price ran the stops. We've had a nice bull run. We're not anticipating a reversal, but we know that price is likely to make a swing high. So we buy the next day, and this is one of those days where the day trader might potentially lose. Okay? It's just, this is what it is. We buy every day until we see a swing high form. And then there it is. Swing highs form, and now the market is showing indications that it actually wants to now retrace. Okay, so now in this video we went over a lot of key points on the daily time frame on how we create a daily bias using the narrative that we see in price. Most important things that I want you to guys get out of this video is to understand that there's origin swing points that are used as accumulation points or reaccumulation or redistribution, and they all break out of consolidations. So it's really imperative that you use all of the market profile things that I've taught you since episode 1, 2, and 3 now, put it together and use it, because continuation markets don't just come out of nowhere. You have to see a consolidation. You have to see a breakout from the consolidation and run on stops. You have to see a swing lower high form, and then you have to see the displacement, the break of structure, and the retest of the fair value. And that's what we went over today. All right. The last thing I want to do is go onto the 1 hour chart, guys, and I want to show you how you enter. Let's get right into it.